The next part of politics and participation is looking at tax and the economy. So where does money come from and where does it go? So have a little think about then, what does the government actually have to spend money on? What do the government pay for within our communities, within our country? What do you think the government should pay for everybody, even including rich people? And if somebody has no money, what should the government pay for them? Have a minute or two, have a think about it and try and come up with a list. What do you think should be spent more on within the country, and what do you think the government should spend less on? What are they wasting money on? Totally your opinion, there is no right or wrong answer. Okay, so every year these different amounts of money get spent on the following areas. These are in billions, so it's not £50.3, it's £50.3 billion on each of those areas, but you've got to try and work out which amount matches which area. Press pause and have a go. And there are your answers. So we've got, if we have a look at some of the big ones then, £161 billion on pensions, £162 billion on healthcare, and so on and so forth. Okay, so what we need to know about the economy then, there are some key terms that you absolutely need to know. This is as simple as I can get the notes. If you do have access to the textbooks, you can read them and add some more, but this is the bare minimum. So you need to be aware of something called the GDP, and the GDP is the gross domestic product. And if you do business studies, you'll know all this already, but that basically means the economic output of a country, so how much money a country is outputting. And basically, the more a government spends, it has to either up its taxes to raise that money, or it can borrow money from other countries. That's quite straightforward. If a government wants to spend more money, it needs to get more money, and the way it can get it is through taxing people more or borrowing it from other countries. The less a government spends, it can therefore lower its taxes, and it can lower its borrowing from other countries as well. Under a rising GDP, the government can spend more because they've got more money. In a declining GDP, i.e. it's going down, the government has to spend less. That can then lead to something called austerity, which is where the government spends less. And from the 2010 elections, when the Conservatives and the Lib Dems went into a coalition government together following the economic crash, they introduced austerity. So they took things away like police officers, social services, reductions in money to schools, healthcare and so on. You got a massive uptake of something called academies, which is where schools got kind of sold off from under government guidance. And basically it meant that the government spending went down. There is a problem with this austerity in that people suffer. So, for example, they got rid of, since 2010, 20,000 police officers. Crime rose. They cut down on the NHS, and we've all seen what's happened over coronavirus. So austerity is brilliant because it saves the country money, but at the same time, it's the people who suffer for it. So how does the government actually raise money then? It's either taxing the people or borrowing money from other countries. Every single year, the Chancellor of the Exchequer, who is in the Cabinet, it's one of the top positions just below the Prime Minister, they deliver what's called a budget. And that says it's how the government are going to raise their money that year. So it's an outline of plans how they're going to raise their money. So they might increase tax on alcohol or cigarettes, or decrease benefits in some area. In the autumn statement, which is obviously in the autumn, they then release a statement on how they're going to spend the money. So you've got the budget, which is how they're going to raise the money, and the autumn statement is how they're going to spend the money. Tax, we can get tax in loads of different ways. We're going to look at a few of those in a minute. And some of the services they provide are what was on the last slide. So pensions, military benefits and so on. Okay, so in general, there are different types of economies. An economy is just your money system, how that works within your country. In a command economy, the state or the government control absolutely everything. They own all services, such as railways, your gas, your electricity, your schools, your healthcare, your electricity companies. Absolutely everything is run and controlled by the state. It's not about making money through a business, the government controls it. The opposite to this is what's called a market economy, and like the term suggests, market, it's about business, and this means that private companies run everything, like the USA. So all of their healthcare is privatised, their prisons are privatised. Privatised just means they're run by private companies, they're not run by the state. So everything is run by private companies. A mixed economy is both. So the UK could be argued to be a mixed economy because we've got the healthcare is by the state, but then things like our water and our gas used to be held by the state but are now run by private companies, and you get all those like U-Switch adverts and those kind of things. So we've got a mixture of both. Schools is an interesting thing because some schools are still state run, i.e. schools that are run by the council, whereas others are academies and run by private companies. Right, so where does it all come from then? How do the government get the money? When and how do we pay tax? And should everyone pay the same amount? Have a little think about it. And do you think that if you pay for private healthcare and private education, should you still pay the same amount of taxes? Okay. First tax we're going to look at then is something called national insurance. Now, national insurance is an example of a direct tax. That means that it comes straight out of your pay, your wage. You never ever see this money. It never goes into your bank. It goes straight to the government. And as you can see, that shows how much national insurance you will pay a month. It all depends on how much you earn. The next one we're going to look at is value added tax, and everybody pays this. Most items that you go in a shop and buy have got 20% added on the top that goes straight to the government. That's value added tax. Some things don't have value added tax, like children's clothes and food, and everybody pays the same rate. So if you go into a shop and you buy a jumper or something for an adult, then a rich person will pay the same as a poor person would for it. And it does get the government quite a lot of money. The next one is income tax, and this is the real big one. Again, this is the other form of direct tax. So your first direct tax is national insurance, your second direct tax is income tax. And again, this never ever enters your bank. This goes straight from your employers to the government. And income tax depends on how much you earn again. So if you earn up to £11,500 a year, so that will be probably part-time work or very, very low paid, not full hours, then you pay no income tax whatsoever, because that's too little to earn to be able to pay an income tax. Whatever you earn between £11,501 and £45,000, then you pay 20% income tax on that. So, for example, if your job was £23 a year in money, then the first £11,500 will be tax-free. But anything you earned above that, you'd pay 20% tax on. It's spread out across the whole year, so it's not like you have a few months up till you get to 11 grand and then they start taxing you loads. It's spread out across the whole year, so it's even payments. Then there's another jump. If you earn over £45,000 and up to £150,000, anything you earn in that bracket is taxed at 40%. Now, that has a massive impact if you are earning above that amount of money. But remember, it still counts. Your first 11.5 grand's free, up to 45,000 is then 20%, and anything you earn above 45 goes up to 40. And then if you're really, really high earning, so this would be, really high up company directors or something, then they pay 45% tax. There's a massive argument though about income tax and should it be staggered more. For example, you could be earning £44,000 a year, which is a really decent wage. That's a good amount of money. You're looking at maybe a really experienced teacher or something like that. You could be paying the same tax bracket as somebody who earns £11,500, which is really minimum wage and probably not full time. So even though of course it differs in how much you actually pay, there is the argument that those brackets should be more staggered so that people who are earning less don't pay the same bracket as those who are earning double and even triple what, or even 4 times what they are earning. And that's a big argument. Should the rich pay more and the people who aren't earning as much pay less? So basically, the more you earn, the larger the slice of your earnings you pay. So have a little go, press pause and see if you can work out those. Right, we're going to have a look at some case studies. I want you to decide if the government should pay all of these people's costs, some of their costs, or none of their costs. And remember, this comes from other people's taxes. I'm going to give you no input. This is for you to think. So, case study 1 is George. He needs free bus travel. He needs it because he's 5. Bless him. Should the government pay? Yes or no? Case study 2. Amanda needs a car. She needs it because she lives in a village where there's no jobs. She needs a car to get work and support her family. Yes or no? 3. Sean, he needs a TV. He needs it because he's got 4 children at home. He can only work part-time because he needs to look after them and his wages are just about to feed everyone. The TV's broken, they all get bored and miserable. And then case study 4 is Ahmed. He needs food and healthcare. He came to the UK to work. He was here illegally, but he got a job for less than the minimum wage on a building site. And after 2 weeks, a piece of scaffolding fell on him and he broke his leg. He now can't walk and therefore can't work. Have a go, yes or no? And Suzanne, she needs a disabled toilet built at a local shopping centre. She can't get anywhere without disability access, and the new one at the centre would allow her to do her own shopping and to socialise. Yes or no? And Melvin, he needs food, housing, furniture, support from a nurse, heating, school uniforms, transport. He needs it because he's a full-time carer for his wife. She's developed dementia and he's had to give up work for her. She needs me. My 2 children are at school. We're about to be kicked out of our house because I don't earn any money for rent. Yes or no? And then lastly, do yourself the 2-mark question. Thank you.